everybody? This is Economic News Insights, and today we're going to talk about dollar cost averaging. If you're new to investing and you're looking for a strategy, dollar cost averaging may be something that works best for you. This is not professional financial advice, but as far as beginners go, when I've received advice and I've given advice to beginners, looking back on a 5 to 10 year horizon, this is the strategy that worked best for pretty much all of them, including myself. If you guys are new to Economic News Insights and you guys like to stay up to beat with stocks, Bitcoin, economic news, subscribe to the channel. Let's get into it and talk about dollar cost averaging. So we're here on Charles Schwab's website. They're actually a really good website for information. I also invest with them. This is not sponsored in any way at all. Just saying they've done a great job of outlining dollar cost averaging. We're also going to use ChatGPT and Investopedia. But what we have here is a investment amount. Okay, so you're going to invest a set amount at regular intervals over time, also known as dollar cost averaging. It can help you manage timing, risk, and stick to a long-term plan. So let me just kind of summarize what they're saying here. You can do this, say, every month. You put in $50 into, say, Tesla stock or gold or Bitcoin or any sort of market, S&P 500, asset, security, whatever it be. So let's just use Bitcoin as an example. So if Bitcoin's price at say, January 2024 or January 2025, it's say it's $100,000. You buy $50 worth, but then in February it goes down to $94,000. Then in March it goes down into the 80s. Okay, so what you've done is you've put in 3 different buys at $50 each over 3 months, and then you get the average of whatever those 3 months were. So if it's 100, 90, and 80, you've basically got an average price of 90,000. So when it went down, you weren't really panicking because you were sticking to the long-term plan. So there are some pros and there are some cons. We will break down the cons as well to this, because in a bull market, dollar cost averaging isn't as favorable. But long-term, no matter what, like Warren Buffett says, it's not timing the market, it's time in the market, right? So it's an age-old question. When is the best time to invest? The answer is deceptively simple. When stock prices are low, right? You always want to buy the dip. You always want to buy when they're low, when they're on sale. However, trying to time the market, waiting for the best time to buy, sell an investment, it's not very easy, right? So what you have is the time-tested strategy to potentially lower the average cost you buy through spreading out your purchases. So dollar cost averages, the practice of investing a fixed dollar amount regular basis, right? So if you come down here, you have month one, $100, share price $5, share purchase $20, or 20 shares. $100, $5 a share, 20 shares. $100 again, $2 a share, 50 shares purchased. So you get more bang for your buck when it goes down if you're following the same strategy with $100, right? Because when the price goes down, what this does is it really kind of slows down your anxiety. And so what ends up happening is you're like, hey, I invested up here, but if I keep investing and I believe in the asset, the key is you have to be buying solid positions. You don't want to get into dollar stocks doing this, right? You don't want to be catching falling knives on crappy positions. The ones that I would personally recommend always are going to be like your Fortune 500 or your top tier stocks. They call them the Magnificent Seven, but something like Tesla, something like Microsoft, Amazon, Google, Apple. These have been strong performing stocks over time. Dollar cost averaging into those typically ends up being a good thing. You could get into some more risky plays. We call those maybe speculative investments. We did a video on the difference between speculative investments, gambling, and then just like solid investments, investing like grandpa would, right? But anyway, this is a good example of how dollar cost averaging works in theory. So by this time, after 5 months, total invested $500 because you did $100 a month. Your average share price was $3.70 and you accumulated 135. So the downside to dollar cost averaging, if we actually go over to ChatGPT and we take a look at this here, you could see, let me remove my face here. So the good use is reduces risk of bad timing. You don't go all in at high. Removes emotional investing decisions. Fear and greed. Encourages consistent investing habits. But if it's going up in the market, if say the market is going up, you could be wishing that you bought more aggressively when it was say if right now Tesla is maybe like a $300 share price, you probably would have wanted to buy more at 240, but as it continues to go up, and it reaches a peak, as it reaches the peak, then it kind of gets to a point where you're like, oh man, and then it comes back down again. So in a bull market, dollar cost averaging can be a little bit less fun. But if you take a long term perspective with what we've seen with these V shaped recoveries that we keep getting, we saw a V shaped recovery in 2020. We saw one again in 2022. We've seen one here in 2025. It seems like we keep getting these flash crashes, these market dips, and then quick recoveries. Unlike previous years, you would get a sell off like what we saw in 2007, 2008, and then the market would take forever to come back. But if we go over here to Investopedia and we take a look at some of the benefits, some more, you can see they also talk about already in the market and ready to buy when events send prices higher. So if you're already in the market, there can be an advantage to it. Removes pitfalls, market timing like we talked about. Who should use it? So the investment strategy of dollar cost averaging can be used by any investor who wants to take advantage of the benefits, which include potentially lower average cost, automatic investing over time intervals. So someone who would be a great person for this opportunity here would be someone like with who doesn't really have time to watch the market. They just want to put in $100 every single month. They're just like looking for the best asset to buy. Typically, it's going to be it could be an ETF, it could be gold. I don't know, buying $100 worth of gold ever so often, probably not something that you would want to do. You might want to do that with gold mining stocks. We can talk about that in another video. But overall, it's typically someone who's wanting to buy an ETF or Tesla or AMD or NVIDIA or Microsoft. That's kind of where you guys want your mind to be working on that. And it says, however, dollar cost averaging isn't for everyone. It isn't necessarily appropriate for those investing time periods when prices are steadily in one direction or the other. Be sure to consider your outlook for an investment plus the broader market making the decision to use dollar cost averaging. So they're saying, even in a downturn market, dollar cost averaging, like catching a falling knife, it can be a bit risky, but the markets are changing. We're in a whole nother paradigm of investment cycles, I would say. But I've really seen this beneficial in the price of Bitcoin, and we can dial that in here on with Bitcoin. We can go to right here. We'll just kind of look at how this would have worked out. Let's just say you had been dollar cost averaging Bitcoin since 2016. Well, in my case, 2015. If I had been investing $100 every single month, thereabouts, if we go to the all-time chart, you could see right here, 2015. The price of Bitcoin, if I would have just taken this, let's just say I jumped into Bitcoin in October 2015, $293. So if I put in $100 back then, that would have almost given me a half a Bitcoin, okay? As time went on, the amount of Bitcoin I was acquiring was a lot lower, and the price was going up and down. But you could see, yes, it went up and down, and I was looking at it more like I'm buying fractions of Bitcoin. So I'm not looking at it how much dollars I'm spending as much as I'm looking at how much Bitcoin I'm accumulating. But if in that strategy, you could see I would have bought several Bitcoin over time. I mean, this would have given me at least a couple Bitcoin over time. And if I just ask ChatGPT, let's just say 2015, so $100 over 10 years every month invested in Bitcoin, how much would I have invested versus gained? So we'll ask ChatGPT, because we love using these tools because it makes everything so simple, whereas with Google you wouldn't be able to get that information, right? So it says I would have invested $12,000 over 10 years, and Bitcoin's price is now at $102,000. So it didn't quite give me the exact information that I was looking for, so we'll have to rephrase that. But it's tough to really get that answer out of AI. We tried. I don't know how we could have got that information, but we tried. Anyway, $12,000 would have been invested. Obviously, if I was investing back in 2015 when it was $300 a share or a coin, $100, that would have given me like 1/3 of a Bitcoin. If I did that a couple months in a row, I probably would have accumulated one full Bitcoin at that time, which easily, just having one full Bitcoin out of the deal, $102,000 on a $12,000 investment. So you can see how something like that would work. I mean, we can even dial that in for Tesla. 10 years ago, what was the price of Tesla stock? It probably didn't even exist then, but we'll see if it did. $16.59, currently trading at $3.47. So back then I would have been getting, in 2015, I would have been getting what? 6 or 7 Tesla shares per $100. Now if I tried to buy a Tesla share, it's $347. I wouldn't even get a full one. So you can see how something like dollar cost averaging can really have a great benefit to someone who's picking a strong asset, a strong security, a strong coin, or whatever it is, and then just taking a 10-year outlook. So a lot of times it's going to depend on what you're investing in, but big thing that we want to point out here is be patient, pick the strongest performers, pick strong performers, and just wait. That's what we're taking away here, right? So anyways, hope you guys enjoyed this. If you did, please consider subscribing to Economic News Insights, and we'll see you on the next one.